My next guest is positioning her clients defensively as all of this drama and all the unknowns play out. I want to bring in Banríon, Capital founder, president, Shana Sissel, and Shana's in studio. It's great to have you in studio. When you say you're positioning them defensively, what does that mean?
So it means that I'm focusing on large cap stocks, quality factor, low volatility factor are primary areas that I want to have focus. I'm going to stick with sectors like consumer staples, healthcare. I like some of the defense stocks, not defensive, but defense.
Right.
And
like the Lockheed Martins of the world.
Yeah, my favorite name in that is Leidos. It's
LDOS.
Yep, it's more of a mid-cap name, and it's done really well. It has a good diversification, and it's not as heavy in that wartime kind of business. So I like that name. So the other thing I'm doing is I'm doing a lot with alternatives as a hedge, and I know we've talked about this before. There's some really good liquid alt products out there that are really good diversifiers.
So let's talk about that for a moment, because even the language, okay, liquid alt products. What does that mean? A lot of people are hearing now, right? All the experts are coming on TV saying, hey, forget about the market for a minute, buy yourself some short-term bonds. Get a yield, get 3%, 4%, go to bed at night, go to sleep at night. But there's a world out there of alternatives that are a little bit more sophisticated, but maybe you could even make more money on. Explain for someone who's never done it before, someone, a potential client of yours, sitting down in front of you the first time, really interested in this.
Yeah, so first off, I hate the term liquid alternatives, but there's nothing else really out there to call it. That's what we just refer to it as. But they're basically products out there that are hedge funds, kind of like hedge fund type of products, but they're available to everybody. And a lot of people don't realize this. Now, they are more sophisticated. They are a little harder to trade in your, Fidelity or E-Trade, pick your poison accounts, but they can offer some really good diversification and downside protection. And I think the important distinction here is there's a difference between a fund, ETF or mutual fund that is using, options, puts, leaps, covered calls.
They have strategies, though, that thrive in these environments, though. It's more so than taking a risk on these extremely volatile markets.
So they're diversifiers that don't necessarily need the market to go up or down. So one of my favorite is an ETF. The ticker symbol is BTAL. It is a long short. It goes long low volatility stocks and short high volatility stocks. It's completely market neutral, which means it doesn't really matter which way the market goes. As long as low vol outperforms high vol, it will outperform. It's up double digits year to date, and there's not many products out there that have equity exposure that are up 14, 15% year to date.
So in the meantime, obviously defensive, neutral with respect to these strategies. So you're anticipating the Fed to be a major headwind for some time, well into next year.
Yes. So I think that Jim is right. I think you're going to see the Fed turn and raise rates 2 more times, 75 basis points. I think they're going to pause in 2023. I actually think we're going to see a recession in 2023, but fun fact, there's never been a recession that started in the 3rd year of a presidential cycle since 1929. So historically, it would be a big deal because this would be the 3rd year. But I do think we are going to see that. So I think you need to stay defensive going into 2023. And then as the Fed pauses their rate hikes.
As we get a better handle on the Federal Reserve, then you can broaden out, become more aggressive. By the way, I think I read the 3rd year of a new president is up on average 17%, 95% of the time. So
midterms. Midterms always have positive returns. In the 12 months following midterm elections, the S&P has never been negative since 1942.
All right, we'll keep an eye on it. Now we just know we have a strategy now to get us to that point, to that launching point. Thanks a lot, Shane. I appreciate it. All right, folks, there's so many ideas, so many trends, so many things to discuss. You should see how much time I spend on this show. I want to invite you, read my daily market commentary every single day. I know you'll love it. It's at wstreet.com. Check it out. Meanwhile, should the Federal Reserve remain independent? Now, both sides of the political aisle are asking this question out loud after a series of major mistakes that have hurt you personally. I'll ask economist Peter Morici himself at 2:25. But first, get out a pen and pad for us. We're going to take you to history school and chart school all at the same time. You're going to love this segment. Mark Newton's with me next.